Hi, everyone. Welcome back to the Connect podcast. Today we have Michael Messner from Vantage Accounting. Hi, Michael. Thanks for coming on.
Yeah, hi, Brooke. Thank you so much for having me on the podcast. I was really excited to do this one, and finally today has arrived. So, my pleasure to be here.
It's awesome. So, can you tell us a bit about yourself and Vantage Accounting?
Yep, excellent. So, to all the listeners, think of a young George Clooney. I think that'll give you the right picture. And yes, Vantage Accounting. I am an accountant. That's probably a good thing or a bad thing, but I like to have a bit of fun as well. And that's why I'm obviously here on the podcast today. Um, I specialize in international tax, but I keep it small for the SMEs out there. Love working with SMEs. The important thing is we're here and available for you. You don't need to wait for weeks to talk to us. And the most important thing is we don't hide behind emails. And that's why I decided to come on the podcast as well, to share a bit of knowledge, because the most important thing is to let the client know what their options are, what they actually have, and break it down and make things simple for them so they can make a well informed decision.
Yep, you're absolutely right. So, today we're going to touch a bit on company structure and what is the best company structure for your businesses. Can you tell us a bit about what the difference is between a business structure, enterprise, and a company?
Absolutely, and this is a really good question. A lot of people don't really know the difference between a company versus a business. Sometimes we throw the word enterprise in there as well. Obviously, talking to an American here, Brooke, Americans love the word enterprise as well. What is really the difference, right? I think the easy one is a business. A business is just an activity that you carry on in a professional manner to gain and produce income. What could a business be? A business could be buying and selling cars, or it could be importing headphones and retailing them to the public. Or a business can be recording podcasts for different businesses for a living, or different entities for a living, and charging for your services engineer as an engineer or as a surveyor, and so on and so forth. So, business is really an activity that you do on a recurring basis with a bit of a plan. And I know, unfortunately, some business owners don't necessarily have too much of a plan. They're just really good at doing something and do it over and over. But yeah, doing that in a somewhat organized way on an ongoing basis with the aim of achieving a profit. That's a business. Now, the business is actually a type of enterprise. You can do multiple enterprises. An enterprise can be a business, but it can also be a one-off activity that you undertake to achieve a profit or to make some money. For example, buying a property, whether it's commercial or residential, doesn't matter, and then renting it out to someone. That's an enterprise. But I think everyone who's listening to us today can appreciate that buying a property is nowhere near as complex and as involved as carrying on a business. And that's a bit the distinction between the enterprise and a business. A business, there's just more to it than purely being an enterprise, but it still falls in the category of an enterprise. And a lot of people interchange the word business and company when they really shouldn't. A company is a legal structure. A shareholder gives share capital to a company, which
Mm.
is an imaginary entity, so to speak, but legally it can sue in its own right and enter into contracts in its own right, and do activities in its own right. One of those activities could be a business, doesn't need to be a business. A company could also just buy a property and rent it out, or buy a property and make it available to a owner to live in for asset protection purposes. But yeah, the company is a legal structure. The business is the activity that you usually carry on in the company. And frequently we have the question, should I be carrying on a business in a company? Should I not? Frankly speaking, the answer to that is very, very complex. There's no boilerplate answer. I could have a discussion with you about this for probably a couple of hours, but I know we have limited time available, so we'll keep it bite-sized at the moment.
Yeah, no, that's a great explanation, and I feel like it is very easy to understand in that perspective because it is confusing and it's hard, especially when you're starting out or newly established. You don't know which is the right direction to go. Can you actually point us into that direction of what would be the right business structure for someone who is exploring these options? I know there's sole traders, there's ABNs, there's companies, there's trusts. Do I open a trust? If I have a partnership, like how am I going about this? Can you give us a little explanation because it's confusing?
Absolutely, and that's why I'm here today. No, thank you for the question, Brooke. Look, I think again, it's one of those answers. Again, it really depends. One size doesn't fit all, but broadly speaking, we have multiple entities in which you could be carrying on your business or enterprise. To name them, we have obviously the option of a sole trader. What's a sole trader? Brooke, you yourself want to do an activity, you just start doing that in your own name. Congratulations, you're a sole trader. Now you
Is
say,
that,
hey,
sorry, really fast? I know that we get this question a lot. Is a sole trader just an ABN? Because
very good
everyone
question.
asks that.
Very good question. Almost. A sole trader is not an ABN. This is a really good question. Sole trader is not an ABN. But if you are a sole trader and want to sell your services, if you supply your services to someone in Australia, you need to issue an invoice that's usually requested, and they want to see that you have an ABN on there. Because if you don't have an ABN, they actually need to do withholding at 47% and remit it to the ATO. So you need an ABN. Therefore, if you carry on a business in your name, Brooke, you just issue an invoice in your name, you need to apply for an Australian business number, an ABN, and put that on your invoice. If you say instead, Michael, I'm going to incorporate, I'm going to do it through a company, you will never have an ABN in your own name. You will have an ABN in the company. So really it's a number that just shows who's actually making the supply, because whoever makes the supply needs to be registered with an ABN.
Thank you for explaining that. That was
No
a
problem.
very easy way to understand.
Very good question, and you kind of hit the nail on the head. Why do we like, or why would we consider the sole trader as a structure to carry on our business from? Um, because it's easy, it's quick. All you do is you quickly go online, apply for an ABN, and within a couple of seconds you have an ABN, and off you go. Yeah, you might then have to register for GST depending on your turnover, and that's where you really need to talk to your bookkeeper. And everyone who listens to this podcast, I think we have a good link here to a good bookkeeper, so reach out to them. But yeah, it's as simple as that. You could go online, get an ABN, and off you go. That's the great thing about being a sole trader. It's easy, but this is where the advantages end, in my opinion.
Yeah. And
Yeah,
also, another question that we have in regard to that, when you start out, a lot of people just essentially go with that ABN if they're sole traders because it's the easiest way to get started quick. When is that transition necessary to go from an ABN to a company?
yeah, really, really good question. I get this question all the time. Look, fundamentally, I don't like my clients operating as a sole trader. And sure, there's people saying, "Oh, it just costs money; it makes no difference." Brooke, do you have car insurance?
Yes.
But you're a good driver, right?
Right.
Then why do you have insurance? You don't need that. You
Just
could
for the
just drive
protection.
around without.
Yeah.
It's the same with an incorporation, because as a sole trader, you are personally liable for all with all your assets for anything you do as a sole trader. So that's a fundamental problem. You just don't have any asset protection, right?
Yeah,
And I
and I
know,
think that's important.
yeah, most people are obviously concerned about tax benefits, and there's certain tax benefits as well, not being a sole trader.
Mm,
Um, but my starting point is just asset protection. You've worked hard for everything you have.
right.
Why would you want to lose it all because you saved yourself $500 a year?
Right.
And this is actually the difference between us being a sole trader and having a company. It's $500 a year. Fine, it could be $550, it could be $490 roughly. It goes up with inflation, but $500 again, Brooke. Sorry, I don't mean to put you on the spot. How much was your car insurance per year? Probably about $500.
Yep.
Yep. So why do you want to pay that, but you don't want to pay for incorporation when it costs you $500 per year? And what a company basically offers you, amongst other benefits, is literally just that it's a separate entity to yourself. That means if anything happens in the course of carrying on that business, nobody can sue you. Instead, they have to sue the company, and all you stand to lose is what's in your company. Now, the reality is you don't lose the family home because
Right.
that's not held in the company. You don't lose your personal car. You don't lose the money that's in your offset account.
Right.
I'm cheating a little bit in my answer because obviously a company, it's nice to sign some paperwork and incorporate a company. You still need to have a director, and a
Mhm.
director can be still held liable for certain things, but that's really only if they have a guilty mind, if they have been egregious in what they did, if there was intentional disregard for the law, it was fraudulent, it was reckless, corporate manslaughter, to name one of the items. So we're talking about serious crimes here,
Right.
or just not meeting the tax liabilities of the company. The ATO can potentially hold the director personally liable with their personal assets, but I don't think anyone who is actually interested on this podcast, listening to the podcast today, would ever say, "I'm just not going to pay my taxes because I don't want to,"
Right.
which means that you have that asset protection that a company has, and that's obviously a big deal for us.
Yep. No, that makes total sense. And can you kind of walk us through a trust?
Yeah,
Like, yeah, I think that's really another question that everyone hears that, oh, I have a trust, but they don't exactly know like why or the
yeah.
tax benefits and whatnot.
Look, a trust is a bit like my marriage. I kind of know what's going on, but they're not really. Recent example is that my wife said somebody should bring out the garbage, and I said, "Yes, sweetheart, I agree." She was angry with me for 3 days. Now, what I didn't realize, and after 3 days, I said to her, "Sweetheart, I don't want to fight. Like, what's going on? You're angry. You know why I'm angry." That's what she said. And I said, "Well, no, I don't. Generally, I don't want to make you angry. Just tell me what's happening." And she said, "I said you should bring out the garbage, and you didn't do it." And I said, "Well, hang on. I you said somebody should bring out the garbage, and I agree. If you would have just told me that you mean me, I would have just done it."
Right.
And she said, "No, you're supposed to know this." So, for any listeners on this podcast who are married, if your wife says someone should do something, that usually means you, right? So, let's just put this straight. But trusts are a bit the same, right? So, an individual person, Brooke, you can contract in your own name, you can be liable with your own name. A company can contract in its name, yeah, through the director, but he only signs the paperwork on behalf of the
Yep.
company. It's the company that's liable with its assets. A trust is not an entity. A trust can't contract in its own right. A trust is really a legal agreement between a trustee and a settlor. What a settlor does is he gives $10 to the trustee and says, "Trustee, please hold this money and use it for the benefit of the named beneficiaries, mum, dad, and the kids, and the dog, and another company, and whatever else," right? We have a
Mhm.
quite big clause here. At least in Australia, New Zealand is similar. The United States are very, very different because of tax reasons, right?
Yep.
Interesting enough, also, so I want to throw this in. Trusts are actually a construct of Anglo-Saxon law. So if you go to continental Europe, or parts of Africa, which were former French colonies, or you go to South America, there are no trusts. They don't exist. And what is that trust really? It's the difference between legal ownership and beneficial ownership. If I say, "Brooke, can you hold my pen for a moment?" And you say, "Yeah, sure, no problem," then you're the legal owner of that pen. Legally, you own that. But for my benefit, you have no right to give that away to someone else. All you can do under this fixed trust, what we've just created, is when I come and say, "Hey, Brooke, can you give me my pen back?" You can say, "Okay, here it is, Michael," and you have to give that back to me. So that is what a trust is. So what we usually then do is we put a company in charge as trustee for the trust,
Hmm.
and that way we've got limited liability. Again,
Yep.
that benefit from the company, but also we have a raft of beneficiaries, and those beneficiaries we can distribute profits to every year as we wish. So the beneficiaries are mere volunteers. "Brooke, do you want $1,000? Yeah, sure." "Oh, yeah, I'm not giving it to you. I'm the trustee. I just decide not to." Next year, "Oh, Brooke, you'll get $2,000 from me." "Why? I didn't even ask for it." "Well, this year I feel like it," right?
Yeah.
We have this flexibility, and this is important in Australia because in Australia we can't income split. In the United States, you can do what's called a joint filing. In
Mm.
Switzerland, Germany, France, you can do the same. You can't do that in Australia. So you have, for example, dad who's working full time and mum who is a stay at home mum, for example, or vice versa, the other way around. Mum wouldn't earn anything in our example. Dad needs to pay tax at his marginal rate, and even though mum doesn't earn anything, he can't use her tax free threshold. That's different in the United States, for example, as we discussed.
Yep.
With a trust, you can achieve that outcome effectively, that you can income split. You can take business profits and say, "Okay, I'm now going to distribute to mum so that she's uplifted and we use her low tax rates. And then after that, this year, for example, we distribute some profits to a company, so we benefit from the 30 or 25% flat tax rate.
Yep.
And that's the beauty of a trust. The other thing is we also, again, have that asset protection. So we like trusts. And I think that's where the difference is to a company. It might sound the same. A trust gets a 50% capital gains tax discount if you have a capital gain, so you only pay
Okay.
tax on half of that gain.
Yeah.
A company doesn't get that. A company can retain profits at 25% or 30% tax. A trust can't do that, but instead, a trust lets the profit flow through for taxation purposes to the beneficiaries, and then we can mix and match who gets which amount of income, so we can achieve a specific tax outcome every year. We've got flexibility. So what we frequently do, this is really the gold standard in terms of
Hmm.
structure. We set up a company at the very least. The company could have different shareholders, but keep in mind, share ownership is fixed. You can't easily flick around income and
Right.
in the future pay dividends to the children without having extra taxing points. And that's why the shareholder of the company is usually the trust. And the trust can then receive the dividends from the company and then distribute them to any beneficiary in the group that we would want.
Okay, that makes sense. So, can you also explain? I know another question that I get asked a lot. What is an offset account?
Very good question. An offset, so that's a completely different construction side, but I'm happy to answer that. Obviously, if you have a loan, you pay interest. If you now have some spare cash and you don't want to pay interest, you pay down your loan. So assume, for example, that you took out that loan to buy an investment property or to buy a business or to pay business expenses. The interest that you pay is tax deductible. If you now have $5,000 lying around extra and you pay down your loan, and then 2 weeks later you say, "Oh, I want to go on holiday," and you pull $5,000 out of the loan account,
Hmm.
you will find that the interest on that next batch of $5,000 is not tax deductible.
Okay.
And you can't just say, "Okay, hang on, I paid a $5,000 back now," because that payment of $5,000 would be apportioned across the non-deductible amount and the deductible amount. So you can't ever get rid of that non-deductible portion again until the whole loan is paid down. What an offset account allows you to do, it's just a deposit account, like a normal running account.
Yeah.
And basically, the agreement with the bank is you don't get any interest on the money in the offset account, but your interest in the loan account is reduced appropriately.
Okay.
And when you pull the money out of the offset account to pay for your holiday, you just end up paying a bit more loan interest on your loan again. But the beauty is the loan balance never reduced, and the original loan balance was taken out to buy that investment property or pay for the business expenses, and
Hmm.
that's why you still have full deductibility. So
Okay.
that's why we like our offset accounts.
So, yeah, a lot of people do that, especially when buying property.
Exactly right. To have that flexibility to save themselves some money, and then they can spend it easily again, also without having to do a redraw or to do a redraw, having to pay a redraw fee. Exactly.
Mm, awesome. So can you go? Can we go back to company structure and so who should be a director and what? Like why?
Yeah, that's a really good question. As I said earlier, a director can potentially be held personally liable for debts
Mm,
of the company, and that's why we want to be really careful about it. Let's take a client of mine, Davina. Davina is a general practitioner, a doctor, and she operates out of a trust with a corporate trustee. Somebody needs to be the director of that corporate trustee, and that is a risky position in terms of asset protection. While Davina is the one who practices as a doctor, so we
right.
would make her a director.
Okay.
And that's about where we'd leave it potentially, because the harsh reality is that I know there's a lot of emotion amongst our clients, and they say, "Hang on, we're married, we're in this together. Husband also wants to be director." This is where we have to discussion with them. Hang on, you're actually gaining no benefit other than the good feel good factor, being able to say at the pub, "Hey, I'm a director."
Yep.
But the reality is you also have exposure. So if you have an at-risk entity, an entity that's carrying on a business,
Yep.
we usually only have one of the spouses, usually the one who does all the decision making,
Yeah.
being a director. and the other one is not a director. Why? Because they have less asset protection risk. And on top of that, if you then think a bit further, we're buying the family home. Who's going to own the family home as the owner? Is it going to be both mum and dad? Well, no, it's going to be the spouse who's not a director, because that way we can avoid any risks in terms
Smart.
of asset protection. And don't worry, if there's ever a marriage breakdown, so we need to talk about this stuff, it's all joint matrimonial property anyway. So that's a different body of law again and completely separate. So, look, ideally, nobody should have to be a director because all it brings with it is risks.
Yep.
But somebody needs to do it. If you want to have a company or corporate trustee,
Yep.
you need to have a director. And keep in mind, the only other option is to not have a company and then carry on the business in your own name, but then everything's on the line anyway. So
Right.
that's the question. If we just have passive investments like shares owned in a company or in a trust with a corporate trustee,
Mhm.
or maybe an investment property, yeah, maybe mum and dad both want to be directors to be able to make the decision making together.
Yeah.
Frankly speaking, though, again, that just holds up the signing of documents, etc. Mum and dad still have to talk to each other anyway, whether someone's a director or not. Doesn't
Right.
really matter. So it's about practicality and simplicity. But our first and foremost concern is just asset protection. It always comes back to that insurance. And this is where a lot of clients initially come to us and say, "Oh, what structure do I need to have in order to save on tax?" Well, the reality is Australian tax law is really, really tight. There's only
Right.
so much we can do. But let's talk about asset protection, because most of our clients, they just want to make an informed decision, have an accountant who explains things to them like we talk about it now, and then they can make an informed decision and then they can sleep at night and they have one less worry, because being in business is hard enough as it is.
100%. And the thing is with you especially is you explain it to them, and I feel like that goes a lot further because most people don't understand. They're it's a foreign concept to them, especially accounting. They just know they need an accountant and they know they need to file taxes, and if they have employees, do BAS and all everything else that comes along with it. But they just want it done. But I think understanding the basic foundation is way more important, like especially when getting involved in a company business, like which is the best avenue for you, and what your desired outcome is, because you need to plan for the future as well. Like you can't just think, okay, well, in short term this is what I want to do. This is a long term investment, so to say, and it's the biggest
Absolutely.
investment in a business.
Absolutely. This is potentially your livelihood, and it can become more than just your livelihood. We've got a lot of clients who are very successful, built businesses from scratch. I've got one client who started with nothing, couldn't even finish high school, started as a roofer, and now he's turning over $180 million and makes $12 million profit a year and has a sizable business. And I have a very good relationship with him. He's extremely smart, but at the end of the day, he always says, "Michael, you're the only one I can trust." And I tell you what, whatever you tell me, I appreciate you explaining it. I understand 50% of it, but that's good enough for me.
Yeah.
And I know you're there when I have extra questions, but I know what you're telling me is the way to go, and then we do it. But and to be honest, that's I'm quite proud of that. It's a very personal relationship, and obviously a lot of trust is put into us. So thank you to all my clients who are listening today. And that's, I think, the way it should be with your accountant. You should have them on call and on standby. A personal relationship. There's no prejudice. You just talk to us, and keep us in the loop. And we opine, it's your decision, but you need to make an informed decision. I think that's the key thing.
I definitely agree. We have to wrap up now, but I really appreciate you coming on, Michael. It was very informative, and I know that it answered a lot of questions that we keep getting asked, even as bookkeepers. But if anyone wants to get in contact with you, what's the best way to go about that?
Yeah, www.vantageaccounting.com.au. Remember to look out for the guy who looks like George Clooney. Okay, you will never find me on the website. Just look for Michael Messner. And yeah, if there's questions, we always like helping out. My phone number's on there. My email address is on there. Just give me a call. Say, "Hi, Michael. I heard you on a podcast recently and I've got the problem. Was hoping, and I'd like to pick your brain, and we'll have a chat to you. We'll come out for a coffee and hopefully make life a bit easier for you."
Awesome. Well, thanks for coming on, and we really appreciate it.
Thank you so much, Brooke. It was an absolute pleasure.